A good small C's candy. I'd love to buy it, certainty of it, but that counts. Arbitrage was a good business. We would do way better percentage-wise with Berkshire if it were 1/100th the present size. Berkshire Hathaway can borrow money for 10 years at 1% in Japan. Maybe I can earn more than 1%. Every time I'd see somebody in an industry, you learn a lot about the business after a while. You can piece those things together and you learn a lot about a business. Give me $1 billion and tell me to go into business and try to make it better than Wrigley's. I can't do it. History does not tell you the probabilities of future financial things happening. I came out and I've gotten something that enables me to allocate capital. I am in the right place. I don't buy Coke with the idea that it's going to be out of gas in 10 years. We want to buy businesses that we would be happy to own forever. I don't know the answer. Large caps versus small caps. We don't care whether companies are large cap or small cap. I don't want to buy any stock where if they close the New York Stock Exchange tomorrow for 5 years, I won't be happy owning it. I like the product by itself. I like the products that stand alone, absent promotion or price appeals. I mean, why should something that is essentially a cinch to do well offer you 40% a year or something like that? We do have in mind never losing anything. I never borrowed money when I had $10,000 basically because what difference did it make? I only work with people I like. Be associated with people you like. I am not going to marry for money, so I would really do almost exactly what I've done. I really believe it's better to learn from other people's mistakes as much as possible. Stick with the businesses you understand. I think that's a good way to look at social question. Want a system that produces more and more so your kids' life better than you do. I urge you to work in jobs you love. Take a job you love. You may change it later on. I want a business with a moat around it, and throw crocodiles and sharks into the end of the moat to keep away competitors. I wouldn't want to get involved in currency risk. Beat 1% by investing in Japanese real estate or business. I've been extremely lucky. Lucky with parents, lucky with all kinds of things, and lucky to be wired in a way that in a market economy pays off like crazy for me. I've been lucky, so I would like to be lucky again. Do something enjoyable in all your life and be associated with people you like. Ideally wired for the system I fell into. I am lucky to be born where I was. If American business is really a bond disguised, much better than a bond with a 13% coupon. If everybody in this room trades their portfolio around every day with every other person, you're all going to end up broke. You make your money on an activity. If I can make billions out of healthcare stocks and I should make it and I didn't. Those are billion-dollar mistakes or multi-billion-dollar mistakes. If you are not a professional investor, then I believe in extreme diversification. If you don't know enough to know about the business instantly, you won't know enough in a month or 2 months. You have to have the background of understanding. If you risk something important for something unimportant, it just doesn't make any sense. If you think you're going to be a lot happier if you've got 2x instead of x, you're probably making a mistake. In terms of the qualitative, I probably understand the qualitative the moment I get the phone call. If you don't know enough about the business instantly, you won't know enough in a month. Integrity, intelligence, and energy are crucial qualities in people. If they don't have integrity, you want them dumb and lazy. Why smart people do dumb things. It's defining what I call your circle of competence. The important thing is not how big the circle is. The important thing is staying inside the circle. Look for leadership qualities in people. Qualities like generosity, honesty, and giving credit to others. Once you're in the business of evaluating businesses, diversification is a terrible mistake. Play out that game and do something enjoyable in all your life. Be associated with people you like. Sigmas do not tell you about the risk of going broke. "16 guys with very high IQs entered into that game, and I think it's madness." Stick to disciplined principles of business valuation. In the long run, this disciplined approach will more often than not bring success. The best business I've ever run into is a product that basically hasn't been changed. The best buys have been when the numbers almost tell you not to. When you feel strongly about the product and not just the fact that you're getting a used cigar but cheap. The best way to get to think about investments is to be in a room with no one else and just think. It gets harder all the time the more money we manage. The big thing to do is stick with the businesses you understand. It's got to be something you know. Can't be because the volume looks good on it or anything like that. Got to be a reason you'd buy the business. The biggest mistakes have not been mistakes of commission. They're where we knew enough about the business to do something and for one reason or another we sat there sucking our thumbs instead of doing something. The downside of managing other people's money is not only losing it but also disgrace and humiliation. The goal is to retain dollar bills and turn them into more than $1 at a decent rate. It's the only way we'll get paid. The important thing is staying inside the circle of competence. You should know those businesses well enough so that you don't need to do lots of work. The real question is whether we can keep retaining dollar bills and turning them into more than $1 at a decent rate. It is the goal. Tying is the friend of the wonderful business. It's the enemy of the lousy business. Very few people have gotten rich on their 7th best idea. A lot of people got rich on their best idea. We don't judge ourselves by the size of its home office building. We judge ourselves by the performance of the company. We hope we're buying businesses that we're just as happy with 5 years from now as now. You want to stay away from any environment that stimulates activity. We never buy something with a price target. We want to buy something that we're really happy to own virtually forever. We never look back. You can only live life forward, and you can learn something perhaps from the mistakes, but the big thing to do is stick with the businesses you understand. You can have any habits, any patterns of behavior that you wish. Be the person you want to buy 10% of in the long run. You can only live life forward, and you can learn something perhaps from the mistakes, but the big thing to do is stick with the businesses you understand. You have to be clear-eyed and not be swayed by the passing fancies of the moment. You have to understand the underlying economics of the businesses you invest in. You only have to get rich once. You ought to buy businesses you understand. We buy businesses we think we can understand. You ought to take a job you love. You'll jump out of bed in the morning. You really want your decision-making to be by looking in the mirror and saying yourself, I'm buying 100 shares of General Motors at 55 because it's your responsibility if you're buying it, and there's got to be a reason. You're also going to want a system that, if it does produce lots of goods and services, does not leave behind a person. Well wired for this particular system. You're not buying a stock, you're buying a part ownership in the business. You will do well if the business does well. You've had this huge revaluation upward. Large companies have done extraordinarily well. Higher returns on capital. Anytime you engage in transactions that involve different parts of the capital structure, there's a potential impact on each part's position. It's a trade-off between the benefits of the acquisition and the implications for the capital structure. As long as we get value received in terms of whether it's cash, common stock, or preferred stock, then you are not diluted in terms of value. I think it's very advisable that family members who will not be involved in management but who will have a key ownership role to play become more and more familiar with the business and the philosophy behind it. If the worry is that we will do something dumb in issuing the preferred stock, you should worry just as much if we do something dumb in terms of using cash or the common stock. It looks like it's all over now for some time. Self-interest is alive and well in corporate America. It's terrific for family harmony, knowing the ownership is stable, and it will be stable for a very long period of time. None of the people that have started up can offer anywhere near the amount of coverage that Berkshire has. Berkshire is really one of a kind in terms of its capital strength in the business. Our continuing interest will go financially well beyond our deaths. Some very smart people working on that. The best businesses by definition are going to be businesses that earn very high returns on capital employed over time. The first question is, can I understand it? And unless it's going to be in a business that I think I can understand, there's no sense looking at it. The other thing about options is you don't make a decision on them until you have to make a decision. We could offer to exchange preferred for present common, and it's conceivable a few people would have an interest, but most people have self-selected in terms of the kind of security they want to own in terms of owning Berkshire Commons. We figure good news takes care of itself. We have a structure that's about as good as you can do in terms of people knowing what they're getting into when they make a deal with us and being able to count on the conditions that prevail at the time of the deal continuing for a long period in the future. We know we wouldn't do it if we were a private company. We don't want to enter into any implicit contract with our fellow shareholders that will cause us to behave in a way that we really don't want to behave. We like the credit card business very much. It's the kind of business that will keep getting better for a long, long time. American Express will do well. We only give a couple of instructions to people when they go to work for us. Think like an owner and just tell us the bad news immediately. We try to give you the information that we would want in the annual report. We try to give you enough information about the capital employed, the margins, and all of that sort of thing. We try to have a culture that leads people to want to bring us the bad news sooner rather than later, and we certainly don't shoot the messenger. We would rather do whatever makes the most sense for us and for the seller and then explain to you whatever accounting peculiarities may arise out of the transaction. We're more interested in bad news always than good news. We figure good news takes care of itself. We're not going to give 120% of X if we're only willing to pay 100% of X just because the form of a deal changes. We're trying to find a business with a wide and long-lasting moat around it, surrounded and with protecting a terrific economic castle with an honest lord in charge of the castle. We're trying to look at businesses in terms of what kind of cash can they produce if we're buying all of them, or will they produce if we're buying part of them. We've never looked at a projection in connection with either security we bought or a business we've bought. Well, but it's also true if we buy a business for cash and we borrow the money. We are placing a bank or an insurance company or whomever ahead of the position of the common shareholder. You don't have to make it back the way you lost it. I think that's a fair assumption. You know, we are not sticking a number on each company, but we try to give you enough information about the capital employed, the margins, and all of that sort of thing. China and the United States absolutely destined to be the superpowers. We just have to make sure that competition doesn't yet get us to a point where we don't realize that the best world is one in which both the United States and China prosper. China's gonna grow a lot over time. That game's not over, but we've had incredible developments in the United States. Cyber poses real risks. It has tools in the hands of potentially crazy individuals, groups, or even a few crazy governments. I know enough about the cloud to know I don't know enough about the cloud. I pay none attention to economists. They make guesses. So many variables. Good times and bad times in business. I read a lot, and if you just remember these things and apply for 88 years, you've got a lot of interesting quotations in your head. I think the earned income tax credit is the best way to put money in the pockets of people that don't fit well into the market system. I want a president that has that same filter. Reducing the chance of successful use of weapons of mass destruction against us is the #1 job. I want a president that has 2 objectives with the economy. Make sure that there's marvelous growth. Nobody should get left behind. If a trade deficit gets large and it looks like you have no way out from it, it can be a real problem over time. If you're going to run a church, you want your seats to be filled by people that are generally on the same page. I am the Church of Berkshire. It's a dangerous world. It's a dangerous world. It's easier to make a big acquisition in the United States. I love the idea of doing it. Make sure that there's marvelous goofs. We have to keep laying more golden eggs. The best world for them is one where they don't try and grab all the apples. You can't regard this as essentially the equivalent of war. The degree to which they've been. I've observed them for a lot of years and are very close to zero. The government at a relatively local level could provide a decent living. You want them to feel part of the system and you want to get them to have more of their share. We want to make sure that competition doesn't get us to a point where we don't realize that the best world is one in which both the United States and China prosper. We're gonna have good years, bad years, disastrous years. We care a lot about the price. Never said yes to something because we thought the economy was gonna do well. We've got a wonderful partnership. We've got a unity of commitment and an ability to execute on the commitment. We've had incredible developments in the United States. Real GDP per capita is 6 times what it was the day I was born. You always want to talk to a candidate and say, I want to hear what they tell people who disagree with him on the subject. You can be competitors without being enemies, and that's what all powerful nations have to realize over time. You know there's 365 days a year. Things are going to be different. You buy it knowing. 70 to 300 days. Things are going to be different. You want to get them to have them get as more and more of these golden eggs. You want them to get a little more of their share. You're distributing to shareholders through buybacks. Most companies do it through having a dividend policy. The real key will be how the card does over time. There's no guarantees.